Good morning, everyone, and welcome back to Crypto Oracles. Today, we're going to talk about Bitcoin, Ethereum, the option expiry, the current dip that we're seeing. We're going to take a look at some news revolving around Avalanche and their partnership with Deloitte. We're going to take a look at Sanbox and other altcoins. So don't forget to subscribe, smash the like button, and follow us on all our channels. So let's get started right away. Let's take a look at the markets today. We're seeing a second dip, which was somewhat predictable from the previous dip that we've seen a couple of days ago. Some of this dip is related to the option expiry, which we're going to talk about in one moment. We've seen Bitcoin reaching down to $55,000, which is our hard resistance level. If we drop from here, we go all the way down to 50,000. We've seen Ethereum reaching a resistance level, which is also a psychological resistance at about $4,000. And we've seen some of the major altcoins like Solana slipping heavily, 15%, and Litecoin, Ripple, and so on. So overall, not looking too good, but we have quite a few coins like Decentraland, Sanbox, Engine that are actually been running quite well because of the relationship to the metaverse. And we're going to take a look at that towards the end of the video. So let's do a bit of technical analysis for 1 second as we done the other day. So this is the Bitcoin chart on a 1-day scale. And if we look at our resistance level, we see that we clearly have some resistance here at about $55,000, and then we have quite a strong resistance at $40,000. So currently we are just tinkering with this level. We can probably expect a bounce up from here. So what I would expect to see in the upcoming days is a bit of a movement going from this area. So we're probably going to see something like this. And then from here, we'll have to see how this plays out. We may either have a retest or resistance levels on the 4-hour chart, so in the short term, and we could either play it down from here, or from here we could consolidate for some time and then keep seeing all-time highs as we enter December. And the prediction for the end of the year, which following Plan B, was about $90,000. If we also take a look at the Fibonacci extensions, if you're not familiar with what this is, we have a technical analysis article that you can check out. I will link it in the description down below. So what Fibonacci does, it tells you what most likely retest levels are. If I can find the correct tool. Oh, here we are. And this is kind of a self-fulfilling prophecy. So most traders will use these levels. It's a bit of a mathematical approach to trading, but because most traders use it, then you kind of have this self-fulfilling prophecy where these levels, when they're hit, we see bounces up or bounces downwards, and they're fairly reliable over time. So what we can see here is that we just about have resistance at the 0.5 Fibonacci level, which is one of the major levels, and then just below that is the 0.61, which is one of the also one of the strongest levels for a retrace. So we look at this, we use this tool to usually see what the retrace levels may be, and each of these levels could be a retrace. So we actually see here we are just about the 0.5 Fibonacci level, and we could rebound off from here, which is quite likely, at least in the short term. Let's take a look at Ethereum as well. I charted this for you a couple of days ago in the 4-hour chart. This was on the price movement on an uptrending channel, and we've seen it rebounding back from the lower side of the uptrend channel on the 4-hour scale. If we zoom out to a 1 day, we see we broke down from this channel, and we're now below just above $4,000. Kind of bouncing back sharply today, which is good, at least this morning. We have strong resistance at $4,000, which acts as a psychological support level as well. Below that, we're looking at $3,600 and then all the way down to $3,300, $3,200. The good thing is we have a long-term resistance line going through these different points at $1,700 and then $2,700 and then up to today at $4,000. If we don't break below this line and we have a bounce back or consolidation around here, we're likely to keep seeing the price rising in the next couple of days. Next up, let's just take a quick look at the whole market. Most of these coins, major coins and altcoins are down, but then if we scroll through, we have Crypto.com CRO. They've been doing a lot of marketing stunts lately. They launched their mainnet, so this is one of the reasons why they've been pumping in the last week. But then mostly we see anything that's related to the metaverse and gaming, which keeps going up despite the market dip. And gaming, it's very much the new sector to look into after NFTs if you're interested in this area. Sanbox is also going up 58% in the last 7 days. And I think Engine as well, somewhere down here. Here we go. Up 5% this week. So overall, anything related to the metaverse is still on an uptrend. There's still a lot of interest in the space. So today it's the option expiry for Bitcoin and ETH and Ethereum, and traders analysis indicates that Bitcoin dropped to $57,000. This is an attractive entry for hodlers, so from long-term holders. This is likely. We always seen these dips in crypto. We always seen prices slip 15 to 25%, which was the average in the last couple of years. And every time this happens, of course, we have a lot of buyers entering the space and trying to catch these dips, especially if we are on a bull run as we are now. So remember, we're not talking about bear market yet. We haven't flipped our current levels at the moment. So talking about the futures and options expiry, we had an expiry today for 550 millions of open interest. So if you don't know what futures and options are, we have a good thread about it. I will link in the description down below. In short, an option, it's the right to sell or buy at a price that was defined in the past. And you have that right, and you can exercise that right at the expiry date, which is usually in the future. In this case, that's today. And we can see that Ethereum broke from the uptrending channel, as I was describing in my own charting. And if we take a look at what the open interest for the calls options and the put option looks like, so the call option is the right to buy and the put option is the right to sell. You can see here that most call options are in the $4,600, $4,800, even $5,000 for Ethereum, while most of the put options are in the lower range, 3,500. This means that pretty much no one is going to exercise their calls. Why would you want to buy Ethereum for $4,700, $4,800 when you can buy a spot price, which is just about 4,000, right? So only a few amount of people will be able to exercise this. Well, if you look at the put option interest, a lot of sellers will be able to exercise their options because they will be able to sell Ethereum at $4,600, for example, or $4,400, which is higher than the current price, meaning they will be in a profit and likely pull the price down. So if we take a look at the breakdown, actually the only interesting one is this one, between $4,000 and $4,100, which is where we are today. We have 80 calls, which are bullish, and 35,000 puts, which are bearish. The net results favor puts, the bearish instrument, by 140 millions. Now, this is not a huge expiry, but it is quite consistent, and we may see the price of Ethereum slip further if we break resistance. Next up, really good news from the US. Lawmakers push back on crypto provision in infrastructure bill. So we've seen the infrastructure bill hitting the markets a couple of days ago. That was the beginning of the current dip that we're seeing today. Just a reminder, the infrastructure bill relates to the US. It's a bill to support the local infrastructure across different sectors, but it also somewhat attacks the crypto space by forcing anybody doing transactions above $10,000 to effectively disclose these transactions as a broker. And these was put a lot of confusion into the hands of traders and people that had projects in the crypto space, because it's actually quite challenging to do this, and especially with the wording they use in the infrastructure bill, which wasn't as specific as it probably should have been. So we've seen a proposal from a group of House Democrats who seek to change how updates to the tax code affect crypto entities who do not engage in brokerage services. So lawmakers from both sides of the aisle, which is really good, are fighting back against the crypto tax reporting rules for crypto brokers and transactions over $10,000 in a newly passed infrastructure bill. They call for a revision of the definition of broker. As I mentioned in my previous video, this is what this is all about. If you define a broker as a trader like you and I, then it's going to become very challenging for any of us to do simple swaps and trades among ourselves for anything above $10,000. Experts warns that the contentious new rule could see miners, validators, and wallet developers considered as brokers for tax purposes. The letter calls on House Speaker Nancy Pelosi to exclude this group on the grounds that it does not engage in brokerage services, which makes sense. If you're a miner or you're a validator node or you're a wallet developer, you shouldn't be considered as a broker. You're not a brokerage facility as in the sense of traditional finance. And there's a really good video going around on Twitter these days about this, kind of explaining how the government sees this crypto tax bill. And in my opinion, there is a lot of people passing these bills in the US government that have quite likely a very, very small understanding of how the crypto space works and who should be considered a broker and who cannot be considered a broker. As it is written today, the BIF, the infrastructure bill, would increase uncertainty in the cryptocurrency industry, pick winners and losers, and thwart IRS efforts to accurately tax cryptocurrencies, all while ending our country's competitive edge against other countries on the digital asset marketplace. So of course, if this bill goes forward and nobody pushbacks, then this could be a hit for the US compared to other regions where cryptos are more freely traded. Next up, Bitcoin miner go public on NASDAQ. So we've seen a merger of a group of miners and they're now live on NASDAQ. This is just really, really good news. I love to see anything related to the crypto space going live and being traded on the standard stock market and centralized finance. This is good news, especially if you think about Bitcoin 3-4 years ago, where everybody was looking at it in somewhat a bad way, where everybody was thinking about it as somewhat scammy or shady. And now we're seeing these major companies that relate to Bitcoin or Bitcoin mining going live on NASDAQ, which is one of the biggest stock exchanges in the world. Next up, Acala wins the Polkadot parachain auction with $1.3 billion in DOT committed. So we talked about Acala and we talked about Moonbeam in a video from a couple of weeks ago. We talked about Polkadot parachain auctions. So in short, a parachain auctions means that a project like Acala or like Moonbeam can go up for auction by locking a certain amount of Polkadots. And then if they win the auction, they basically win a slot on the parachain, which is basically a side blockchain to the main Polkadot blockchain, and they basically can use that slot for the next 2 years. And Acala was one of the first DeFi platforms on Polkadot. Moonbeam project relates and revolves around moving ETH contracts from Ethereum to the Polkadot blockchain. And we've seen both of these competing head-to-head in the parachain auctions. The first lot was won by platform Acala after days of jockeying for its first place with Moonbeam. When contribution to the auction ended Thursday at noon European time, Moonbeam had gathered most from its community, over 1.36 billion, over Acala was the lead for 63% of the time, even though it only took $1.3 billion. So really bullish for the ecosystem. We will see more projects moving in. We will see the Polkadot ecosystem growing. And yeah, don't forget to follow our channels if you want to get updates on all of this. And next up, Avalanche soars to new highs after Deloitte adoption, but risk emerged for the AVAX price. So let's take a look at Avalanche. Avalanche ecosystem has been growing in the last couple of weeks. We've seen all-time high after all-time high. They rose to new all-time high yesterday at $110, and then we've seen a bit of a slip, down 12%, I believe. So AVAX picked its bullish cues from Deloitte decision to use Avalanche blockchain for building a disaster relief platform. The deal would help state and local governments to easily demonstrate their eligibility for federal emergency funding. Avalanche blog post further noted that their blockchain solutions would assist Deloitte in minimizing fraud, waste, and abuse, which is prevalent in existing disaster management solutions. AVAX's potential use case in the coming Deloitte disaster management system prompted traders to make bold bullish calls. We've seen the price rise upwards. If we take a look at the technical, Then, as I said before, the AVAX price dropped by more than 10% on November 18th after hitting the all-time high. The selling pressure intensified as the Avalanche token tested its upward sloping resistance, which is this dotted trend line that we see here. And that constituted a rising wedge in conjugation with the lower ascending trend line support below. So if we just take a look here, we see AVAX reach 110, and it's quite likely to now drop. If it drops below this support line, we're likely to drop back down to about $90, where I'm expecting to see some consolidation. So we're likely to see some consolidation in the $70 to $90 range before we keep moving upwards. One thing that we look at in technical trading as well, it's the divergence in between the RSI, which is a momentum indicator of the price, and the movement of the price. So whenever you see a divergence, so the RSI is going down, the price is going up, then you can expect the price to retrace, at least in the short term. So the AVAX token may continue rising until it's in the apex. It may continue rising until further resistance is what this is saying. Then it would risk dropping lower by as much as the maximum height between the two trend lines. We're talking about this trend line and this trend line. That would put AVAX en route to about $90, which is pretty much what I was saying now. All right, and then the last piece of news, we're talking about the metaverse, we're talking about Sanbox. Sanbox is finally launching the game. This launch is scheduled for the 29th of November after 4 years in development. You should be able to participate to the launch somehow, but it's not open to everyone. You're going to go through it now. So Sanbox Virtual Gaming World enable users to monetize their time spent in the metaverse while playing via play-to-earn model. So you're basically being paid to play the video game. The event will start on November 29th at 1 p.m. UTC and will run until December 20th. And as I said, you can participate, but only under certain conditions. So there is a selected group of 5,000 users that will have the chance to earn up to 1,000 Sun tokens, which is around $3,000, and free NFTs by simply spending time in the metaverse and going through 18 different experiences in the Sandbox game. The Alpha Pass is the ticket that you need to actually get into the game, and there is different ways of getting the pass. One way is being a landowner. The other way is owning Sun tokens and participating to a raffle. You can check out their website that on November 22nd. If you join their website on November 22nd, you should be able to apply for the raffle. And if you're lucky enough, you may be able to participate. So thank you for watching. Don't forget to subscribe and smash the like button. I hope these news and analysis have been useful to you. If you do like them and you have any questions, feel free to leave comments in the section down below and check us on our social media profiles. Thank you, and I will see you tomorrow.